The topic today is handling public buildings, and I thought, well, that's kind of a strange topic. And the more I thought about it and the more I looked at the statutes, I thought, well, no, this is actually a very complicated and very nuanced topic. And so in order to deal with this, I need to put this in a context. Now, when we think of publicly owned properties, we always think of exemption. They don't pay taxes, but that's not the case. And I think you'll be very surprised as we go through. I'm going to move this from very general to excruciatingly specific as we go along. And I think that you'll be very surprised to see the instances in which government-owned property is not exempt from taxes. So in order to deal with this and understand why this may be, we have to think about the fact that all property in Indiana, under our Constitution, is taxable. All property is taxable. The Constitution does provide for exemptions, and it says specifically in Article 10, Section 1, that the Indiana legislature permits, or the Constitution permits the legislature to exempt property from, certain property from taxation. Now, I think that's really important here because an exemption is permitted. Property is taxable. An exemption is permitted by the legislature. The majority of specific exemptions are found in Indiana Code 6-1.1-10, as you know, but exemptions are found throughout the code, and they're found in some of the strangest places. And so you probably have not heard of a lot of the exemption exceptions that we'll talk about later. Exemption procedures, and we will talk about this in more depth. As I say, that I'm going to go from very general to very specific. Exemption procedures are found in Indiana Code 6-1.1-11. The procedures include things like the application requirements and deadlines, among other things. We'll talk about those later. If you take away nothing from this presentation, I want you to take away this thought. An exemption is a privilege, not a right. And an exemption is a privilege which may be waived by the entity that would qualify for the exemption under other circumstances. Even government property. We kind of think of, you know, churches and schools and things like that in a different context than we do government property. Government property is exempt. You don't have to worry about it. It's just, but that's not the case. Now, I'm going over something that Mike talked about earlier, and it bears repeating because it's, especially in this context, as you have a framework for what we're going to talk about, exemptions and deductions are not the same thing, and it makes a huge difference because you think of exemptions, you know, it's a privilege. It's something that's granted to you, and your property as exempt property, it's not taxable. Now, that may be 100% or a percentage, as you know, as you're dealing with hospital gift shops and things like that. But the concept is that exempt property is not taxable to whatever percentage. Property receiving a deduction, on the other hand, simply receives a reduction in the assessed value for purposes of taxation. Very different concepts. And the distinction is important as we go along. And as you think about exemptions, as you're dealing with these public buildings, and it's not just public buildings, that's shorthand for any public property, whether it be a bridge or a building or a warehouse owned by a government, all of those issues, airports, we'll cover all of those. And they're not all just automatically exempt. Now we'll get into the heart of the matter. Is every public building exempt from taxation? No. Use and occupancy may determine if a publicly owned building is exempt from taxation. The statutes are your guideposts, and I will have a whole lot of statutes in here, and your take-homes will be your reference material as we go along. I may not actually reference each one of those as we progress. United States property. This is one of my favorite slides, and you'll see why. This is from statute, so you can see how the legislature is struggling with this. It says the property of the United States is exempt from property taxation to the extent the state is prohibited by law from taxing it. And they didn't stop there. They also said, however, any interest in tangible property held by the United States must be assessed and taxed to the extent the state is not prohibited from taxing it. So they were just itching to tax that. They see those big federal buildings and those courthouses, and they're thinking, that would be a whopping amount of money, and we would, just give us the word, and if we figure it out, we'll figure out a way to tax it. So that statute is kind of funny, because we say, okay, U.S. property, no, you don't tax federal government property, and the legislature says, yeah, we don't, but only to the extent that we're prohibited from doing that. State property. Oh, state property. Except as otherwise provided by law. Those are the 6 most frustrating words in statutory interpretation. It will drive you crazy, because you know that what comes after that is probably not going to hold true in most cases. So, except as provided by law, the property owned by the state of Indiana, a state agency, or the Bureau of Motor Vehicles Commission is exempt from property taxation. The State Fairgrounds is also, and the property of the State Fair Commission, regardless of where it is, most of the property is in Marion County. But if they have other property, it's exempt from state taxes, local taxes, license fees, and special assessments. That's not always the case with government property, as you well know. Political subdivision property. Again, those 6 words, except as otherwise provided by law, which is, again, very frustrating. The property owned by a political subdivision of this state is exempt from property taxation. Well, what is a political subdivision? A political subdivision means a municipal corporation or special taxing district. That's not very helpful. So we look to the definition of municipal corporation. And as we go through the presentation, you'll see that the definition of municipal corporation is basically entwined with the concept of exemption does not necessarily hold true as we go to specific scenarios with respect to these different units of government. Municipal corporation means a taxing unit, school corporation, library district, local housing authority, fire protection district, public transportation corporation, local building authority, hospital authority, airport authority, service district, or other separate local government entity that may sue and be sued. The term does not include special taxing district, but as we said in the slide before, special taxing district is included in that exemption. City or town property. Now this is going to cause us kind of the most grief, and we've got some more specific examples as we go along. City or town property is exempt from taxation if it is owned by a city or town and is used to provide a municipal service. So the mere fact that a city or town owns property does not automatically exempt it from taxes. This is where you get use and occupancy and those kinds of issues coming into play, and they will come into play as we move forward. Property used to provide a municipal service includes a public school or library, municipally owned park, golf course, playground, swimming pool, hospital, waterworks, electric utility, gas or heating plant, sewage treatment plant, disposal plant, cemetery, auditorium, or gymnasium, and any other municipally owned property, utility, or institution. Now you think, well, that's it. I know now what a municipal service is. Oh, if it were that easy. Of course it's not. And we will have a couple other instances where the legislature has specifically deemed some surprising situations as municipal service, deeming that to be exempt property. Now we're going to briefly talk about the assessment of exempt property. I know you're obviously not assessors, but this affects actually everything we do because it's a continuous cycle of taxation, assessment, budgeting, and distribution to the units. So it's important just to know this. All property otherwise subject to assessment must be assessed in the usual manner, whether or not it is exempt from taxation. However, no assessment shall be made of property which is owned by the United States, the state of Indiana, an agency of this state, or a political subdivision, if the property is used, and in the case of real property, occupied by the owner. So if you don't have that, even these governmental types of properties must be assessed so that you know the value of the property that you have in your county, and if it is not used in these ways, yes, it must be assessed, and that will show up on the total amount of assessment in your county. Change in ownership. A change in the ownership of an exempt property will not necessarily result in a loss of exemption if the property continues to meet the exemption requirements under Indiana Code 6-1.1-10-16, which is the charitable, educational, scientific, or 6-1.1-10-21, which is a specific religious exemption. The county assessor may suspend an exemption. I know this is a little bit surprising, but the county assessor may suspend an exemption if he or she discovers the title to the property has changed and the assessor has not received an affidavit, which is our form, Notice of Change of Ownership of Exempt Property, State Form 54173, identifying the new owners and indicating the property continues to meet the requirements for the exemption. To suspend the exemption, the assessor must notify the person entitled to the tax bill of the change in title that an affidavit under penalties is required. When an affidavit is presented, the assessor must reinstate the exemption for each year the property met or continues to meet the requirements. Change in ownership from non-exempt to exempt. This statute came into being in 2011, and it's more of a reinforcement and clarification because it was a little bit confusing of something that you already, in your heart of hearts, knew. For an assessment date in 2011 or later, if real property is not exempt on March 1st, in other words, a private individual or somebody owns property on March 1st, and the title is transferred before December 31st, that same year, and the new owner applies for an exemption for the next assessment date, and the PETA-BOA determines the new owner qualifies for the exemption. For the non-exempt assessment date, any deductions and related tax cap credits should be applied to the property such that the exempt entity will benefit. In other words, they're going to get a traditionally exempt organization or entity will be receiving a tax bill, but they will get the benefit of homestead deductions or any other deductions that were properly in place on March 1st. That just gives the exempt entity a little bit of a tax break, and I would expect that most When there's a transfer between an exempt and a non-exempt entity, generally the buyer and seller work out those issues between themselves. Those are not a county issue, they're not a DLGF issue. Those are private buyer-seller kinds of issues to work out how they're going to get those taxes paid. Another area of confusion with respect to government-owned property are with respect to leasing and contracting, either the government entity leasing the property from a private owner or a private owner leasing property from a government entity, and yes, that does happen. In general, if real property is exempt, that is exempt, in other words, for purpose of this, is leased to another whose property is non-exempt, the lessee, the person who is renting that property, is going to be taxed as if the lessee owned that property. If the state or a political subdivision leases to an entity other than these particular groups that are listed there, the state or political subdivision must notify the county assessor of the existence of the lease, the term of the lease, and the name of the address and the address of the lessee, so that property can be taxed, even though it's in the name of a government entity. Same with contracts. If state or political subdivision real property is purchased under contract by a person who is a non-exempt entity or is not engaged in an exempt purpose, the property will be assessed and taxed as if it were owned by the contract purchaser, even though the property is in the name of a government. With regard to property leased to the BMV, I think there is the most confusion about this as with just about any kind of a lease situation. There has been in the past, I think, some widespread belief that if an individual leased to the BMV, somehow that business owner did not have to pay taxes. They were exempt. That was not the case until 2011, when there was a very specific statute. And I think that what I want you to take away from this is that this is not a broad brush exemption for anyone who's leasing to the BMV. If we look at this carefully, you can see that it is very specific and very narrow. Property leased to the BMV for assessment dates occurring 2010 through 2016, and the taxpayer who owns that property filed or refiled the application after January 15th, 2010, and before January 25th, 2010, an exemption application. And they previously got an exemption, whether they deserved it or not. The taxpayer is entitled to an exemption for each applicable assessment date for all property leased to the BMV or the BMV Commission. That taxpayer is not, they thought of everything, required to pay property taxes, penalties, or interest with respect to the exempt property. That's very specific. It does not give a broad brush. And I think as we go forward a little bit, I'll point out the statute that I think people were using to give an exemption for people leasing to the BMV, and I think you'll see that that did not apply. School buildings leased by a corporation to a school is exempt from property taxation. Again, very surprising because you have a private corporation receiving an exemption simply because they lease to a school. However, the rental payments that the lessor corporation receives is taxable. Waterworks facilities leased by a lesser corporation again, is exempt from state, county, and other taxes. However, the rental paid is, again, subject to taxation. Now, this first paragraph is what I believe people were using to grant exemptions to people leasing to the BMV in the past. This particular statute applies to local governments and local government agencies, not to the state. So structures, transportation projects, and systems leased by a lessor contracting with political subdivision or agency of the political subdivision, not of the state, are exempt from all state, county, and other taxes. However, rental paid, again, is subject to taxation. So I think that's probably where the concept came in. It was not the best wording in that statute, but that definitely applied to local governments. Solid waste disposal facility leased from a lessor to a unit is exempt from state and county taxes, but the rent is, again, taxable. Now, this particular slide deals with leasing property by one of these universities to private individuals. And Ball State, IU, Indiana State, Purdue, Southern Indiana, and this is not in there, so you might want to know, Ivy Tech and all of its name iterations is also included in this. A state educational institution is exempt from all property taxes on any real estate leased under Indiana 21-31-4. However, the lessee of real estate leased from a university, a state university, is liable for the property taxes on the leased real estate, except if you're a student, and they had to make that clear because students basically lease their dorm rooms from the university. So with that exception, anyone leasing from a state university must pay the taxes, even though all of those others who were that we talked about prior, leasing from governments or leasing to governments are getting exemption. That is not the case when they're leasing from a state university. Now we'll get into some specific exemptions, and I don't want to beat this to death, but I want to make you aware of specific exemptions and some nuances with respect to those exemptions on government property. Libraries, and we talked about libraries earlier, and so you think, well, libraries are exempt. Well, a library that's owned by a corporation that has established a public library is exempt to the extent that it is used exclusively for public library purposes. So if they rent out that property for parties or whatever, because some of the libraries look like banquet halls, that activity will actually be taxable. Airports, there are three types of airports I'm going to talk about. Generally, the acquisition and improvement of land for use by the public as an airport is a municipal purpose, regardless, now get this is just amazing to me, regardless of whether the airport or maintenance facility is owned or operated by a municipality. So that's a little bit of a tortured interpretation of municipal service, but it gets, I guess they didn't really actually have to say that at all. They could just say it was exempt. Basically, airport property that is used for public airport purposes is exempt. And public airport purposes includes things like taxiways, runways, lighting, access roads, parking areas, operation and maintenance, hangars, and weather equipment. But again, see, there is a little bit of a nuance there because they talk specifically and about purposes. So property that is not used for those things is taxable. With respect to an airport in Marion County, it's kind of the same way, but it's said a little bit differently. It's exempt except to the extent that the property is not used for aviation-related purposes, and they've kindly not defined aviation-related purposes, but that's where your discretion comes in, and obviously you've had some experience in understanding what aviation-related purposes are. So again, there's a little bit of a nuance there. Anything that's not associated with aviation-related purposes is taxable, even though it's owned by a government. However, airport facilities owned by the Department of Transportation are simply exempt from taxation regardless of what they do. They did not put those distinctions in that statute. The ports of Indiana. You say, well, okay, they're exempt from taxation. They are. But property owned by the ports that is not located at a port is not exempt. And I'm saying that because it says an exemption is not available for land not located at a port. So again, very nuanced, very specific. That last sentence there means something. And when you talk about the port property being exempt, and they specify property not located at the port facility is not exempt, that's taxable property. Marion County parking facilities generally are exempt. However, if they revert to private use, then it will be taxable. Bridges. You think bridges are exempt? Well, they are for the most part. If they're entirely within the state, across a navigable stream or across a stream forming a boundary of the state, the bridge is owned by a state or political subdivision, and the bridge is operated free of tolls. Very specific, very narrow. Those are the kinds of issues you think, well, we've never taxed a bridge. You probably could be. But if the tolls are used to pay for the sinking fund for the cost of the bridge or proper maintenance, repair, and operation of the bridge, that exemption cannot be denied on the basis of the fact that it is a toll bridge. We get to another one of those municipal purposes that are kind of surprising and that were not included in that statute that talked about municipal purposes. Urban homesteading property. Real property held under IC 36-7-17 that is conveyed by contract with retention of the deed by the city is deemed to be the property of the city held for municipal purposes. Again, the city and the individual who is going to be purchasing that property under contract made an agreement, but the statute says that that property is used for municipal purposes, for exemption purposes. Another surprising municipal purpose. Municipally owned water companies owned by a domestic corporation of the state is exempt if the corporation owns a water system. The corporation is supplying the entire output of water at wholesale rates to a city or town of the state, and the city or town that receives the water owns at least 95% of the corporation's capital stock. That, again, to get that exemption for a municipally owned water company, and you think they must all be exempt. No, that's very specific statute. That's very detailed. So when you have that detail, it's clear that those properties that don't meet that criteria must be taxable. We're getting toward the end of the time here, and I don't want to take up your lunch hour, but I just want to run through this very quickly. War monuments are generally exempt. However, if a city has agreed to put up a monument, has land set aside for it, but has not made a good faith effort to build that monument in 1 year period, then that property becomes taxable even though it's owned by the city. I'll touch on one more of these specific exemptions. Property transferred from the state to a national monument, a memorial property or building, is exempt from all state, county, township, and other taxes, but is not exempt from the payment of special assessments. Now I'll just run through these very quickly so it just kind of puts it in your mind. Hospital bonding authorities, county hospital building authority, water supply district, and toll roads are exempt. State educational facilities, as we talked about before, are generally exempt. The state educational facilities and the operation of fieldhouse student unions and halls of music are exempt to the extent they are used for state educational purposes. Again, that's not really defined, but it does show you that there is a limitation on that. State research facilities and their support facilities are exempt. Redevelopment district is exempt from taxation while owned by the district. Urban mass transit systems are exempt from property taxes, but it doesn't say anything about any other types of taxes. County Building Authority, County Capital Improvement Board, Marion County Improvement Board are exempt from special assessments and taxation. The exemption application, well, you think, well, they don't have to fill out applications. Well, not so fast. Indiana Code 6-1.1-11.4 says the exemption application ordinarily required under IC 6-1.1-11-3 is not required if. So when you have an if, that means you have criteria for not doing that. It is not required if the state exempt property is owned by the United States, the state, an agency of the state, or a political subdivision, only when it is used in the case of real property occupied by the owner. That's your if to not filling out the application. An exemption application is not required if the exempt property is a cemetery described by Indiana Code 6-1.1-2-7 or maintained by a township executive. Exempt property that is owned by the BMV Commission is not required to fill out, or they are not required to fill out an application in order to receive the exemption. That's all I have for you today. I appreciate your attention. I appreciate your time. If you have questions, please feel free to email me or call me. I would prefer email because, and if you leave me a little bit of a scenario, it gives me a chance. Believe it or not, I have not memorized every statute in the Indiana Code. So even I have to look them up, and so I think it helps and it saves everybody time if I know what the problem is and what you're interested in knowing. And I think if I can come back to you in my email with an answer, I think that's going to be probably more beneficial for all of us. So thank you very much.